Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by the Cal State Bakersfield Small Business Development Center. Good afternoon. I'm Kelly Bearden. I'm the director of the center and your host today. And we have a great topic today, the California IBank, the California Infrastructure and Economic Development Bank. Great things going on there that not enough people know about, but let's change that today. So, as mentioned, as previously sold to you, we have some great small business lending programs from the state of California, from the IBank. And that is going to be today's focus. Our special guest will bring Megan in just a few minutes. But first, we're going to touch on our regular features here, our capital quarter. And our capital quarter is going to be on applying and receiving funding for a small business. So, tying into some of the lending programs will be some of the application and the fact of getting those small business loans. Our economic corner didn't have any really groundbreaking news until just a moment ago. So we do kind of a retread today, and we'll give you the groundbreaking news that really isn't too earth-shattering, but we'll get to that. Our third regular focus is on AI and question mark. AI and question mark, our focus usually is on tying AI to our subject matter of the day for Webinar Wednesday, and it's going to be on packaging, projections, and funding using AI to help improve your loan chances. As always, your answers to your questions will be given after today's presentation, so stick around. Go to the Q&A box, which is usually, I believe, hidden behind the more, yes, more little button. You can also add those to your chat. Our producer, Maureen Butcher-Dang, will be throwing things into the chat today and also working all the behind scenes. And yes, we do have a couple of poll questions today. So let's jump to our poll questions. Just a couple of two little basic questions to start the day off. And poll question number one is going to be, have you ever been declined for small business financing? Very simple, yes, no, or you've never applied. So, very simple first question. Have you ever been declined for small business financing? Um, if the answer there is no, you probably haven't applied. Because if you could just go into your bank and get a small business loan, oftentimes you're not here today. So we are going to, we already have 73% of you participating. To the question, have you ever been declined for small business financing? Yes, no, or never applied. So 81%, thank you for your participation. We're going to end the poll and share the results with you. And our first poll of Webinar Wednesday, number 386, shows that 54% of you have never applied. And we also have 31% of you, yes, you have been declined, 15% no. So we'll work on those that are going to be applying and kind of some of those no's as well. So thank you. So our capital quarter segment is our segment that usually ties our capital, our need for capital, accessing capital for small businesses, and kind of ties that to our topic of the day. Our theme, of course, is the big, beautiful bill there, the $100,000 bill wearing former President Woodrow Wilson on it. And so, what we're going to share with you first is some slides that we got from our participation in the Federal Reserve Bank, of which we'll talk about in a few minutes. But the Federal Reserve Bank does an annual small business credit survey. To this particular question, they wanted to ask the share, the number percentage-wise that applied for financing in the prior 12 months. Kind of ties in with our first poll question. There were about 6,500 people across the country, And so what you see here is in the purple is the number of firms that actually participated from the CSU Bakersfield and Valley Community SBDCs. So essentially the central and southern San Joaquin and the eastern Sierra area. And we see that we actually had less that applied. Yeah, kind of had less also on our poll question today. So applied for any type of financing, and that would be loans, lines of credit, the dreaded merchant cash advances, equipment leasing, trade credit, credit cards, and accounts receivable financing. And then also our percentage was higher that did not apply, which is very relevant to today's poll question results. And the second question was basically the reasons for applying for financing. So the reasons, which would have tied to our second poll question, pretty similar. Expand your business, 45% for us, 46% nationwide. We see a big jump in those that applied nationally to meet operating expenses. So working capital and to come up with more ways of meeting the operating expenses. So big jump over our region. Also, a big jump in our overall region was to have available credit for future use. So have some funds that were available. Not the easiest capital to quite kind of get, but interesting that that was substantially higher also across the country rather than for the central and San Joaquin valleys. Make repairs or replace capital assets slightly higher, and refinance or pay down debt also higher. So interesting report on that. The reasons for applying and how our region compared nationally. And our final slide of this was the top reasons for not applying. And hey, we had a lot of not applying out there. So maybe these were the same regions and reasons. So our area, substantially more debt adverse, really doesn't like that, doesn't care for it, hopes to get by with cash flow, bootstrapping, other means is what that's telling us. And then the second really strong reason where we were substantially less was not needed or had sufficient funding. So these were the non-applicants that are firms that did not apply for funding in the prior 12 months. Um, so you see that they were given multiple choices. That's why it doesn't equal 100%. But it's really interesting kind of to see how debt averse our region is. Uh, and we had more sufficient funding or less sufficient, even though having less sufficient funding. So fascinating. Okay, so continuing on our capital quarter, kind of some of the things that we observe at the Cal State Bakersfield SBDC, why businesses don't get loans. Generally, it's when they don't get loans, it's because of insufficient cash flow. Lenders that we work with tell us all the time that if they can demonstrate cash flow, the ability to generate more revenue over expenses and show that that payment can be paid off, that they're willing to make that kind of loan. But they're really concerned also, lenders, is that oftentimes the owners doesn't get their financials. They don't understand the financials or they don't get their own numbers on why they're successful. So important to note that owners don't quite understand the numbers. There's limited owner equity. One of the ratios lenders will look at is the equity compared to the debt that's outstanding. They'll also look at the collateral that's available in some programs. Not all programs are requiring collateral, but many require 100% collateral. Some can work with substantially less if they have guarantees, or it's discretion of the lender. The owner cannot sell the promise. And by this, I am generally saying they really can't explain the opportunity that they have. Really selling the promise of your particular business is vitally important. Oftentimes they don't get it because of poor credit, or also, it could be a character issue that is lingering because, for example, SBA funding requires a credit or actual character statement. Oftentimes, businesses will run out of time. The lending process takes a lot of time. And oftentimes, when cash gets short, they simply run out of time. And also, really, this is something that we see frequently at the SBDC is they're applying to the wrong lender. So those are some of the reasons why people don't get loans. But really, I think this next slide is really important on why they don't get funded. So oftentimes, the applicant is just looking for a loan rather than a wide range of funding programs that are available. They're not really looking at some of the alternatives that might be really beneficial for them and really helpful in meeting their funding needs, meeting their access to capital needs. Their timing is not good. So, timing obviously is going to be important. Oftentimes, their package for funding lacks direction. And really, one of the things that I like to say is there are so many ways to fund a small business out there. Sometimes small business owners lack the creativity or the knowledge or understanding in order to look at all the particular programs that are out there. And again, it could be simply applying for the wrong lender. And again, relationships really matter. Kind of like with this guy, Andrew Crone of Marble Bridge Funding Group, a relationship we have at the SBDC. Really, it's these relationships that really help us help our clients. I went soft on our economic corner this week because there was an absence of really good, solid economic data. And of course, then the Federal Reserve came out with their meetings to hold interest rates steady. So interest rates are being held steady. But really, it's a really transformation of what's going on in New Mexico and is really kind of a case study of what's going on. Basically, the second poorest state, and now is flush with tax revenue and built an economic development fund with billions coming in from oil revenue. So, in a lot of the tools that we have, we actually have a great deal of tools here to assist at the SBDC, and one of those is our YouTube channel. And we had a few, about 5, 6 weeks ago, I would guess, Dr. Nankunde Micheka, who came in and gave his great research. So that is available on our YouTube channel if you really want more economic information, is what I'm trying to say today with all this. And plus, I love this slide also on Kern County's contribution to the oil and gas economy. And I always realized that when I ran out of gas in my car, why I didn't have 7 friends to help me push it. I just don't understand. So there's our YouTube channel where all of our webinar Wednesdays, or nearly all of them, go to live. And you can rewatch any of our webinar Wednesdays, including this one, on our CSUB SBDC YouTube channel. So our AI in question mark is today focused on better loan packaging. So on better loan packaging, what I like to see is I'm seeing a little too much AI support on the business plan, and I'm hearing that from lenders as well, is lenders really want you to focus on your business plan and have you write it and have it. Now, AI can assist, but AI-driven business plans, not real popular with lenders right now. AI assistance with some of the tools that are coming up with, for example, here at the SBDC, is we can provide more assistance with technical assistance by using some of the AI tools that we have. Fantastic AI tools that are assisting some of the lenders, particularly those that are realistic, bankable, and financial projections. And of course, I think one thing AI is great at is helping expose some of the opportunities that might be out there for you. We do have a number of student engaged projects that are working with using AI, utilize the SBDC. Again, thanks a great deal to our many sponsors out there. It's great having all of them along. You can contact me. There's my contact information. Please provide me information that you think is relevant on our programs, our services, and any way that I can help you down the road. If you would like some confidential, no cost, no obligation expert consulting, there's our website. Sign up. You can sign up directly in 5 to 6 minutes, and it comes right to us. We will get in touch and set up an appointment with you to help you with your particular business idea. And that brings us to today's special guest. And our special guest today is Megan Hodapp, who's the manager of the Small Business Finance Center at the California Infrastructure and Economic Development Bank, or what I like to say, the IBank. She has managed the IBank's partnerships with 7 financial development corporations located across California that encourage small business lending. She's served as a loan officer at the Small Business Finance Center for 3 years, where she assisted a lot of these programs with businesses and helping the small businesses access capital. Prior to joining the IBank, Megan was a program analyst for the Office of the Small Business Advocate, our friends at CalOSBA, within the Governor's Office of Business and Economic Development, and also for the California Capital Access with the CalCap program, great program, by the way, at the State Treasury's office. Graduated from Cal State. Megan, it's great to have you on today's webinar. Thank you, and take it away.
Thank you for having me, Kelly. I really appreciate it. Good to be back. I was looking through my emails and I think it was 2022 when I was here last, which seems kind of crazy. I didn't realize it was almost 4 years ago, but thank you for having me back. Hi everyone. My name is Megan Hodapp, and I am the manager of IBank's Small Business Finance Center. IBank, or the California Infrastructure and Economic Development Bank, has a lot of different programs. I am in charge of the Small Business Finance Center only, so that is what I'm going to talk about today. If anybody has any questions on any of the other programs like the infrastructure loans, bond financing, climate financing, any of those things, I can definitely put you in touch with the right people if you reach out to me. But I will only be talking about the Finance Center. The Small Business Loan Guarantee Program received seed money in 1968 to help reduce unemployment by supporting entrepreneurship and small businesses. Over the years, the program had a few different homes, but the Small Business Financial Assistance Act of 2013 placed the Small Business Loan Guarantee Program under IBank and renamed it the Small Business Finance Center to accurately represent its many functions. The Small Business Finance Center provides credit enhancements in the form of loan guarantees, both traditional loan guarantees and disaster recovery loan guarantees, direct loans to farmers, and we also operate the California Small Business Loan Match Program. What is a loan guarantee? I'm not sure how many of you on this webinar are familiar with loan guarantees, but I will kind of explain them a little bit first. IBank leverages loan guarantees against a trust fund to provide a backstop for lenders in the event that a borrower defaults on a loan, meaning they stop making their payments. In any of our guarantee programs, if the borrower defaults on the loan, the lender must liquidate all available collateral, and then they can file a claim for the guaranteed percentage of the remaining balance of the loan. This helps lenders by providing a risk mitigation tool that can be used when making loans to small businesses, and in turn, it helps small businesses access the much needed capital. Next slide. Yeah, thank you. The Small Business Loan Guarantee Program incentivizes lenders to make loans to small businesses by offering guarantees up to 80% of eligible loan amounts with a $5 million guarantee maximum. The program can support loans up to $20 million, but our guarantee maximum is always going to be the $5 million. So to be perfectly honest, we don't really see a whole lot of $20 million loans. We do see some in the $10 million range with a 50% guarantee, but I haven't seen one for 20 million yet. The maximum guarantee term we can support is 7 years. And these loans can be used for a variety of purposes, including startup costs, construction, inventory, working capital, and more. The 2 things that are really ineligible for our program is that we can't support anything cannabis related. And we also can't support passive real estate investment, meaning somebody is purchasing a building, they're not occupying it, and they're going to be renting it out kind of as a landlord. As long as they are purchasing a building and they're going to meet the occupancy requirements, that's totally fine with us. The Finance Center programs are facilitated by seven financial development corporations, or FDCs. These organizations were created in the California Corporations Code to help the Small Business Finance Center administer its programs throughout the state. Each FDC itself is a nonprofit corporation with general responsibilities for marketing and administering the Small Business Finance Center programs. They are all also mission-based organizations and they support small businesses and stimulate economic growth in underserved communities. Each FDC is unique, but as a group, they utilize a combination of federal, state, local, and private resources and provide non-conventional community development financing in underserved communities and sectors of small business. The FDCs themselves serve as a partner between the lenders who are making the loans and the Small Business Finance Center who provides the guarantee on the loan. They are not geographically restricted and they work with a variety of lenders throughout the state. So when a small business needs a loan, they will either contact the lender directly or one of the seven FDCs. The FDC and the lender then work together to underwrite the loan and get approval for the guarantee. Once IBank has conditionally approved the guarantee, the lender is able to close the loan and disperse the capital to the business. So a small business is going to go through the normal application process with a lender versus because it's not actually direct financing through IBank, we are just providing the guarantee. One other way for businesses to connect with lenders is the California Small Business Loan Match. So in April of 2024, we officially launched a new website called California Small Business Loan Match, where a small business can visit the website, type in a little information about their business, and get matched to lenders who use our Small Business Loan Guarantee Program. This ensures that business owners are getting matched to responsible, mission-driven lenders who are more likely to give them a loan. So just a little quick recap of how the program works. In essence, the Small Business Loan Guarantee Program works like this. A small business goes to get a lender to get a loan. The lender feels the small business is a little bit too risky to lend to, so the lender decides to use our guarantee program, which means that they enroll that loan in our loan guarantee program. That way, if the small business stops repaying their loan, the lender can come to us and we'll repay the lender up to 80% of what the small business still owes. This gives each lender reassurance that they won't take a total loss if the small business can't pay the loan back. California Small Business Loan Match features lenders that are primarily community development financial institutions, or CDFIs, who are signed up to participate in the California Small Business Loan Guarantee Program. CDFIs are preferred by the small business community because they help borrowers who don't meet the more rigid criteria of traditional banks. For example, small businesses that have a lower credit score or a startup business. They tend to help people in lower income communities and offer much more flexible financing and affordable repayment plans tailored to each borrower's need, and then also offering reasonable rates and terms. Since the launch of California Small Business Loan Match, we have closed 76 loans totaling 4.3 million from the platform directly. And overall, the Small Business Loan Guarantee Program is extremely successful. As you can see, this is kind of the last 10 fiscal years of data. In the last fiscal year ending June 30th, 2026, IBank guaranteed 1,310 loans totaling over $221 million in guarantees. So the program, it works. We do a lot of guarantees each year, and we are always happy to help small businesses access the capital that they need. And then this is just contact information for me. If you have any questions, I don't know, can we ask them now or?
Sure. If we got some questions for Megan right now, let's jump right in and see what we got. So jumping in,
I
we
don't.
do have a question here. Um, Okay. I got a question for you. Okay, we talk about resources. You have a pretty varied state background. Uh, as
Sort
referenced,
of. It's all kind of in the same realm.
as referenced by that fine introduction.
Yes.
So, what other state resources are available lending programs? Because there's some in the IBank and there's others in other programs. Can you share maybe just a little general information on some of the other programs that are out there?
Yeah, so I am currently the only person in the state who has worked for all three of those programs at the state treasurer's office, the Office of Small Business Advocate, and at iBank. I started my career at the state treasurer's office. They also offer credit enhancement programs that are similar to the loan guarantee program, but they function a little bit differently. They have a loan loss reserve capital access program where a fee basically is deposited into a lender's loan loss reserve account. And then if the borrower is unable to continue making payments on the loan, they can file a claim against their loan loss reserve account. They also have a collateral support program where cash collateral is held against the loan for supplement to collateral if there is not enough collateral for the loan. And then through us, we have the loan guarantee program. And then all three of those entities are also the implementing entities for the state small business credit initiative, which comes from US Treasury and the federal government. And California as a whole got $1.2 billion to continue our programs that we already had in existence. So some of that went to the loan guarantee program, some of that went to collateral support. Some of it went to CalCap. The treasurer's office also launched a loan participation program. And then at iBank, we also have a venture capital program that was a part of that SSBCI.
Great. So, let's say I need a loan and I don't have sufficient collateral. Can I stack some of these loans? Can I get a collateral support loan and use that in conjunction with, say, a loan guarantee, or can I just get by with one of those two?
You cannot stack them. That is actually one of the prohibitions, is that you cannot enroll the same loan in multiple government programs. Also, any of these programs that are offered by the state are not direct financing. So they are credit enhancements used for risk mitigation for the lenders, basically, versus the state actually being the one to issue the loan. The loans are still being issued by traditional lenders or CDFIs.
How about if I stack with different entities? Let's say I'm going for an SBA loan and I'm low on collateral. So you can't stack them with anything.
Nope.
Oh, I like stacking.
That's a big prohibition, actually.
So any loan program, not just another state program.
Any government credit enhancement program, one loan cannot be enrolled in multiples. And it even goes as far to say that you cannot initiate two loans at the same time for the same purpose and enroll them in different programs. So you couldn't split the loan up into two loans and then enroll one in one program and one in the other. That's
What if I'm
considered
a private? What if
double
I'm
dipping.
a private lender? So let's say I'm a private lender. Can I do something along those lines? Let's say I'm a hard money lender guy.
Yeah, I'm not
And
following.
okay, so I'm a hard money lender guy, but unfortunately the collateral's not there. So could I get a collateral support in support of my private loan directly made, or is that also still stacking? Probably is, right?
Um, it wouldn't be considered stacking if it was just one credit enhancement program that you were using. However, there are requirements to being lenders. Part of the reason our programs exist is to ensure that we are not supporting hard money predatory lending. So I doubt that as a private hard money lender, you would qualify to be a lender in our program, so you wouldn't be able to get a guarantee anyways.
Ah, dang. Okay, enough of my questions. Let's
I
go to
just
the.
shooting you down.
I know. I mean, I'll come back though. I'll come back strong. Okay, some of the questions we have in the Q&A box. Let's start right at the top. So when applying for an infrastructure loan, are there certain criteria that can be provided explaining how exactly this money will be used?
Um, I
And
need
I
some
think that that's when applying for,
clarification on infrastructure
it might
loans
be just an IBank loan, one of the programs that you have through the IBank is my guess.
from the Small Business Finance Center, because we do also have an infrastructure loan department.
Oh, well, tell us about that.
I cannot talk about that. That is not my wheelhouse. Um, but this kind of sounds like maybe they're confusing.
Yeah, your long title with the short title.
Yeah, so I can.
So IBank, let's look at it this way. When applying for an IBank loan, are there certain criteria that has to be provided explaining how exactly the money will be used?
So a reminder again that it is not an IBank loan. We are simply providing a guarantee on a loan issued by a participating lender. And we do need to know how the money is being spent. And most lenders will require you to tell them what the purpose of the loan is. And for us, there are certain purposes that are not eligible for our program, like I mentioned, cannabis or passive real estate investment. So we do need to know what the purpose of the loan is.
So as far as how long does it take typically to do a loan? And I'm thinking maybe like let's use the state guarantee loan program, which seems to be very popular these days. So is there just a guideline on how long it takes to get a state guarantee loan processed and funded?
Um, that really varies. We have about 130 participating lenders in the program, and they all do their own underwriting and maintain their own underwriting policies. And so my team tends to be the quickest part of the puzzle. It really varies from lender to lender on how quick they can get through underwriting and their loan committees and all of that stuff.
And my stack answer for that at the SBDC is usually I assume it's going to take 3 months, and that's after you've provided all the information to the lender. Sometimes it's quicker, and sometimes it's not. But
It also
uh,
depends on size of the loan. It depends on a lot of different things.
yeah,
It's kind of hard to give a straight answer.
some of the things that could slow it down is a lender requiring an appraisal. It could be a valuation if it's a business that's being purchased. So kind of does vary deal to deal, but you know, I have to throw something out at times, so I always use 3 months. Okay, can somebody apply and get the state guarantee loan in two different loans? Say a CDFI approves an equipment loan with a state guarantee and like to apply for a separate loan for working capital. I guess that would be from a separate lender, two different lenders.
Yes, a business can get two separate loans guaranteed. The $5 million maximum is applicable across all loans. It's per borrower. So they couldn't go over the $5 million maximum, but they can get multiple guaranteed loans. We often see this where they get multiple loans from different CDFIs, or even sometimes from the same lender, two different loans, one's for working capital, one's for a piece of equipment. That is all allowed.
Hmm. I'm going to try to make a little concise question to
Oh,
one question is a little long. And so, what is, generally, since you are a loan guarantor, so a bank will do the underwriting, a bank that you work with. They will do the underwriting, they will do all the processing, and then they will seek a guarantee to offset the risk. So, what are some of the more common reasons that you might decline, or since the bank's already done most of the underwriting, what are some of the more common areas that you might see that you would decline doing the guarantee?
My team is not looking at underwriting. That is all up to the lender to maintain their own underwriting policies, regardless of getting the guarantee on the loan. And then also the financial development corporations then go through and check the underwriting of the lender just to make sure that it is not something off the wall and it actually makes sense and they're not making a bad loan. And then by the time it gets to my team, we are simply looking at eligibility.
Okay, great.
And the
Okay.
program's designed to overcome all of the reasons why businesses struggle to access capital, whether they don't have sufficient collateral, they're a startup business, they have lower credit scores, any of those things. The program can be applied for all of it.
So I think if the lender underwrites it, and a lender that works with you frequently probably knows your eligibility requirements. So it's just working with that lender and getting through the lender, and then it's you're usually in a pretty good way.
Yeah, I will say the lenders are still going to have requirements. Just because they're getting a guarantee on the loan doesn't mean they're going to make the loan to a business. They still have to go through the underwriting, and there are still requirements that the business has to meet, whether that's a minimum credit score or the ability to cash flow or whatever that is. The lender still has to approve it.
Great. So are there any eligibility issues, if I'll paraphrase this question, are there any eligibility issues related to refinancing existing debt, if particularly if it's high rate business debt, like paying off merchant advances, um, financing tenant improvements, things like that?
No, those are all eligible. Definitely we see refinancing high interest business debt often. It has to be business debt. We can't refinance a personal credit card into the business name. But existing hard money lenders or online lenders, you want to refinance that, absolutely. Tenant improvements, yes. Real estate depends. It can be an eligibility issue, like I said, if it is somebody wanting to purchase a building that they're not going to be occupying. If you own a business and you want to purchase a building for your business to occupy, then that's no issues there.
What about eligibility for either prior bankruptcy, tax liens, defaults, pandemic related credit problems, etc.? Are are those eligible to be refinanced?
We don't have any prohibitions on that at our level, but some of the lenders may individually have their own requirements around those.
Okay, great. So, most of the lenders that I talk to, again, going back to being cash flow lenders, if you're refinancing debt and you can demonstrate that it's going to save you money, make it easier to make the payment, and also add some liquidity to your business, it's something that definitely is something to explore. Um, can you walk us through a recent loan that has been either, well, just walk us through a recent loan that you want to talk about and maybe any weaknesses that you've seen or any, just what's a typical loan?
Yeah, I will preface this with, as I said at the beginning, we guaranteed 1,310 guarantees last year. I am not really involved at that level. Like I said, by the time it gets to my team, there are a number of checks and balances before it gets to me, and I'm just looking at eligibility. So I don't really get to see all of the details of the whole process. I don't have enough hours in the day to be able to do that. Um, but I guess I mean I kind of mentioned it. It's hard. I mean, also our loan guarantees really run the whole spectrum. I see $5,000 loans to a mom and pop food truck that is just trying to start up. I've seen $10 million loans for a veterinary practice that's purchasing a building, and kind of everything between.
Great.
And obviously, with the different types of loans and situations, the risk mitigant is different for each of them. I mean, a $10 million commercial real estate purchase that's going to be real estate secured, that's a different situation than a $5,000 inventory loan for a food truck.
So, Megan, you mentioned the state small business credit initiative and what's the monies that are coming through from Treasury,
Mhm.
the U.S. Treasury to the state of California. Um, is that at the IBank or is that at the Treasury Department in California? Where exactly is that? And is there something that you could maybe add some of the programs that are going on with that state
It,
small business credit initiative?
it's both. So California is unique in that we applied for the money from two different offices. So half of the money came to IBank and half of the money went to the state treasurer's office for the capital portion of SSBCI. There is also a technical assistance portion, and that part went to the Office of Small Business Advocate. So within IBank, we have the existing small business loan guarantee program that was funded for SSBCI. And then we launched the venture capital program when we got the SSBCI funding. And then at the treasurer's office, they had the capital access program, the collateral support program, and then they just recently launched a loan participation program. And that is all five of the eligible programs within SSBCI here in California.
Oh, wow, great. Now, are you up on the venture capital program? I remember that when the money was coming, I had heard what it was going to be, but I really haven't heard much since.
I
So
am
I know,
not. That is
well, being a
handled.
small business finance manager, I would assume that you wouldn't know that, but I'm going to ask anyway.
Yeah, it's handled by its completely separate unit and team within IBank. And you would rather me not talk about it because I don't truly understand it very well.
Okay, well, great. I didn't understand it anyway, but now I'm now I'm going to research it
I can
and see
definitely
what's
put
going
you
on.
in contact with the team.
So yeah, I knew that that was part of it, and I believe that it's going to be an ongoing program for a while, so that's great. So you had mentioned you had done work with one of my favorite state organizations, the California Pollution Control Financing Authority. And many years ago, they got involved in small business financing, which I had the hardest time putting together for a long time. Pollution Control Financing Authority, small business financing. But they
Mhm.
came up with this CalCap program, which was a very good program that had some major banks that participated in it, and there was a lot of money loaned to small businesses. Is that still as viable as it used to be? And even though I know you're not working in this program all the time, um, is it still viable and is it still an option for small businesses?
Yeah, that was the one I talked about at the treasurer's office. That's the other half of SSBCI, the CalCap program and the collateral support program. It's
Great.
still around today.
Wonderful. Okay, well, let's jump into the chat. Maybe there's a question or two in there. Go through the chat, and then we see some greetings and salutations. The wonderful CSUB SBDC YouTube channel. There's Megan's contact information. Contact information has the website for the IBank of California and also specific email address. The Cal Loan Match Program, which I believe is different from the SBDC, or excuse me, SBA Loan Match Program. Um, and then also some information on how you can contact us. No other questions there. Megan, any final comments? Anything you'd like to add? And last chance for people to jump in with questions.
There was one question that I don't think got answered. I was keeping it live, but would a government grant funding a portion of a project count as stacking? No, you can get a government grant for a
Oh,
portion of
cool.
it. We are only talking about the loan portion of it being enrolled in government programs.
So it could be a government grant from a municipality, a small lending program. Um, it could also be maybe even something as big as the Small Business Innovation Research grants for innovation in hundreds of thousands of dollars. Um, oh, that's great to know. That could be a really valuable tool. So thanks for asking that. I see one other question there if you want to tackle that one too. Any tips for startup?
Visit your local SBDC for technical assistance.
Oh, there you go. Perfect.
That's always my answer for startups. Um, and then
Okay.
the other part, if you have already gone the technical assistance route and you are ready for financing, one thing I will say is your traditional larger banks are not as small business friendly as CDFIs. I would get really comfortable and understand CDFIs and those types of lenders because they're mission based and they tend to be a little bit more flexible with small businesses.
Fantastic. Very valuable tip. Okay. Well, that's going to wrap us up for this week. Big thanks to Megan Hodapp from the iBank. Great lending programs from the state of California. Talk to your SBDC advisor and they'll help you work with the iBank's lenders on the guarantee program, not the iBank. The iBank's just going to float the money to them once they get that successful loan application, but some great programs. And thank you so much. We'll be back in 2 weeks. Next week, little vacation. So thanks again, Megan. And for our producer, Maureen Busher Dang, everybody have a fantastic week. We'll see you soon. Bye bye.